Okay, much easier for me. Okay, so what you can see here is that all of this from here right down to this point, right, there's your structure, right, poorly auctioned. You can see that, now remember, these are 15-minute bars. They try to snap it back up repeatedly through these areas, right? You can see the rotations up through here, but at the end of the day, until they re-auction this poorly auctioned area, we slipped right through it. Same thing going back through here, right? All of this poorly auctioned, all of this poorly auctioned. The market keeps doing this over and over and over again until it stops auctioning it. Now, there's no obligation that it has to come back all at once and re-auction a poorly auctioned area. It can sit here and spend a lot of time re-auctioning one little area. But the point of that is, and you'll notice this looked, see how this pattern looked exactly like yesterday's pattern? Look at the similarity. Actually, it was even tighter, right? But you can see that it just kept getting more and more compressed on top, and then it finally broke to the downside. This is a very common pattern, okay? And when you have a lot of poorly auctioned area below, it tends to slip. Therefore, that is why on the chart, I have this caution sign. Underneath Globex low, this can get traded through really fast. It doesn't have to, but it means that I am hesitant to take a counter trade in this area. And what is required for me to take a counter trade in this area? Two things. First of all, there has to be tick divergence in order for me to take it. And secondly, it has to get the heck out of, this is a support zone, the 77.79. It has to get, if there is tick divergence, I need my profit in somewhere between 10 and 12 minutes or I'm gone. Okay, it's just too easy to have it come in, pause for a second, and then slide right through. That also means the first place I'm taking a trade is probably right here at this 1874.50, right? I'm not going to wait for gap fill. Why? Because everyone and their brother knows that gap fill's there, and usually you get a very strong reaction. I'm willing to take a full loss at this particular zone the first time in, right? Additionally, I will keep in mind that if we slip through this very quickly in this direction, it is possible to slip back up very quickly in this direction, okay? That's one of the mistakes that happen a lot to day traders. They figure, well, we've fallen so far, let's say this area gets poorly auctioned, okay? We get something that looks like this, and then we slip through like this. And as people will come back up and they'll go, oh, this is my chance to capture the pattern back to the downside, right? But if we slip through this easily going one way, we can slip back up going the other way. So what do? Unless, again, I get a 1 minute tick divergence, and with that 1 minute tick divergence, again, it has about 10 or 12 minutes. I want to see quick rejection out of this area, okay, back to the downside, unless we have spent a significant amount of time prior to breaking this area, okay? And if I see that as different, I will call it out. Okay, so what is my first concern with the gap down? It's a relatively small gap. The first thing, we're down 3.25 points, right? So the first thing I want to see is, are we able to achieve gap fill? I'm not worried about half gap today because it's simply too small a gap at this point to worry about. If we hold this 1881 if we hold this 1881 Globex low, and I'll give it another 10 minutes before changing the zone, I'm going to adjust this zone back so that the 1881 is the back of the zone, and so the zone will go 1881, 1883, just FYI, so y'all can make that change. Okay, so below here, there's a single point of support. There's actually a zone. Okay, so technically this entire thing from 1870.50 all the way down, all the way up to 1874.50, the whole thing is technically an area of support. Okay, so what I would like, how do I handle that when I get in here? There's two ways to handle this area. The way I'm going to trade it is I'm simply going to take the trade and I'm going to put my stop 2 ticks behind this 1870.50. So I have two ticks of increased risk in this particular zone. And I didn't have a cleaner way of putting that. I can't put a zone here because then obviously they'll be stacked on top of each other. But the whole thing is actually should function as a point where we get responsive buys somewhere in this area. My thought process is that normally on open gaps, and if you look, I think right now for the last 8 times we've hit an open gap that 8 of those times we had significant responses of greater than 10 points in the same trading session. And over the next, into the following day, we've actually had an average of almost 20 ES points of a response at open gap. So I am willing to lose money at this particular spot. Okay. The point now, could be quite easy to come in here and get stopped out at the back. Also, I will give this at least 30 minutes to work. So understand that understand that I'm changing my risk profile for this particular area. However, it does not mean you have to change yours, right? I know that I have a good chance of capturing a large trade out of the area. I've had really a pretty big run over the last couple of months, and I'm giving myself some leeway at that particular juncture, okay? But you don't have to switch your trade plan just because I'm changing my trade plan. Notice we're still a half hour beforehand, and I already know what I'm going to do at that area. So you should decide before the open. The normal stop behind a zone is usually 2 points, okay? I'm simply adjusting that risk by 2 ticks, and I'm eliminating the time parameter. If we get a hard down day, this is only 10 down from yesterday's close, okay? If we have a normal range, meaning looking back over the last 30 days, we could easily get 20 to 25 points down, which means I will end up with a loss at this point, okay? I will obviously use price action to a certain degree to make a determination, but the point I'm trying to get across is I want to give this a little bit more at this area to get a responsive buy and try to push back up. Why? Let's look at a bigger picture real quick so everyone can see this, why this area is important. Let's get rid of all this stuff. Okay, first thing that I want to show everyone and their brother knows I'm big on this is okay. This area right here is half back from our most recent and obvious swing low right here, right? So the problem with that is this 1876 and a quarter, while I won't be shocked to see someone respond out of this area, is in the middle of an incredibly poorly auctioned area. If we respond here without getting gap fill, I'm willing to miss this. I don't like stepping in poorly auctioned areas, okay? But this 61.8 puts us which puts us at 1871-ish, right? That's a 61.8 retrace. I suspect once we get a little bit past the 50%, right? So picture in your mind, someone comes in here. This is 1876 and a quarter. Let's put this on the chart real quick so everyone can understand what I'm thinking here, okay? And how I think the market will set up. That puts this 50% retrace right here. There's plenty of fib traders out there. I love those guys. Nothing against them, but they get smoked all the time, particularly at the 50% retrace. Okay, so picture it. Those guys are going to come in here, and they're going to try to step in, probably somewhere between here and here, right? And try to get a responsive buy. They're in a poorly auctioned area. They'll sit here for a couple of minutes. Every algo and their brother knows that this is a 50% retrace. All those guys will put their stop. Well, what does the average retail day trader do, right? A point to a point and a half, maybe 2 points if they're really bold, right? They're going to all put their stops right there at 1874 and a quarter, and they're going to all get their stops run right into this area right here, where then we'll get their responsive buy, right? The 62% retrace is sitting at 1871, essentially, which puts us right here, okay? And so what my bet is that everyone who steps in, or what my guess will be, is that everyone steps in at this 50% retrace will have their stops run, right? We maybe, if there's enough stops, may even run a little bit past the gap fill into this area right here, and then we get the responsive buys for the push back up, okay? That's my guess. It may be a wrong guess, but I've looked at that structure before, and if I were Goldman Sachs, or if I had $1 billion at my disposal where I could actually game this stuff, I would hire a programmer to do exactly that. I'd say, watch for, those guys can see what the stops are building. I'm going to say, every retail trader who trades fibs is going to put a limit order right there at that 50% retrace. we're going to run the stops. We're going to run right back to the 62.8, clear out all the guys who stepped in early, and then we're going to turn around and run it right back up. And so at any rate, that's my thinking, and that is why I am targeting this area right here, and I'm willing to put my stop 2 ticks behind this 1870.50, and that also explains why I'm willing to give this a little bit more time, because I got a feeling they're going to try and screw with traders at this point. Okay, now if I'm wrong, they're going to keep rolling it back, right? So again, what keeps me safe when I'm trying to game things like this on this particular day? Well, first of all, if I get 2 stops back to back, I'll stop trading. Secondly, I have no idea if we'll even get down there to begin with. We're holding above initial support, right? And then the third piece is, if you're uncomfortable trading in this area, or there's too much unclarity because it's poorly auctioned in here, and it's not the biggest rotation, right? That's only 10 points down. You can choose to skip if you don't like that area, or the other way to play it to adjust your risk is simply saying, I'm not willing to take a 4.5 point stop at this location. So super, move your limit entry back down to this 1872.50. Okay, put your stop 2.5 back. If you can't take 2.5, you probably shouldn't be trading the way I trade anyways at all, right? And then you capture the idea that they'll run the 50% retrace traders to their stops, and if we get a big run and we overrun this gap fill, which happens on occasion, right? You get filled, you still have that 62% retrace sitting right above here at 1871, and that should be enough for you to get a reaction of 2 points, get your scale, and get, for those who have trailers, to push up out of here. So I hope I explained that clearly. That's how I'm gaming this area. Okay, below there, if this fails to hold, would be actually pretty bad. Okay, so if we get below this 1870.50, 1868 to 1866, and this 1864 to 1862, what I want to see to figure out if I want either one of these zones, okay, so I want to be clear here. I expect a reaction off the top of each of these zones, okay, for a 2 point rotation. If I can get tick divergence at either one of these zones, I expect a larger reaction, meaning I'm looking for 5 to 10 points of reaction out of those zones. So I want to be perfectly clear, because there's been some confusion lately. I'm running multiple strategies at the zone, okay? The most base strategy that I teach my clients, okay, so they can go from being break-even traders or struggling traders, is very, very simple and straightforward. First touch of a zone, as long as I don't have it marked off as poorly auctioned, as I do here, first time it touches the zone, I expect responsive buyers to step in. Okay, I can't put it any simpler than that. First time in, responsive buyers. It doesn't work 100% of the time, but it is a high odds. Reaction. Okay, 2 points. Okay, is more than 50%, is less than 50% of the average ES rotation. Okay, which is why there's such high odds of attaining that. The way this plays in psychologically, okay, is that what I want to do is rack up a large winning percentage, okay? By giving up the idea that I'm going to get 5 to 10 points on every one of my trades and settling for taking 2 points, is I eliminate my anxiety. I know I have super high odds of capturing that rotation, so I can stay relaxed. Secondly, I've predefined where I'm going to take risk, okay? Don't overanalyze it when it gets to the zone. Everyone gets into whether I should take in the middle, back, front, okay? That skill comes with time. The only way I have of accurately nailing a particular point in the zone, okay, is that I will make sure that it's at least a 6 point rotation if I am not the most aggressive trader out there. But for me, and really prior to 6 months ago, because 6 months ago is when we started having these insane drives one way and the other, but those have pretty much gone away. Even in open drives higher, we've had rotations at the zones. Okay, so what I want when we get to the zone, first of all, I'd like to see us rotate and acquire my 2 points in less than 15 minutes. I generally will not give it more than 25 minutes. As soon as it hits the zone the first time, right? If we hit it like this, then we bounce a little, and then we come in. As soon as it hits the zone the first time, I'm hitting the stopwatch, okay? When I get to 15 minutes, I'm watching a little bit more closely. If it's at a critical point, as in a poorly auctioned area, and I don't have my 2 points, I'm out. If I get to 7 out of 8 ticks, but I don't get filled maybe it goes to 8 ticks ask, 7 ticks bid, and I don't get filled on the 8 ticks, I'm probably moving my stop to break even and or taking a portion of the trade off and still moving to break even. Why? I hate getting run over in those zones, and I don't need every single trade to work for me, right? All I need to do is control my risk. When I get the trades that work, it's fantastic. What I generally do with my clients is I get them used to making the 2 points at the zones to start with, and then as they build their P&L and they have more cushion, they tend to mentally relax, and I can introduce new trading concepts, still high odds trades, a little more sophisticated in their entry and then the parameters, right? And then they can start building their P&L higher and higher. I'll go over more and more of these trade setups once the room goes private. So I wanted to be clear on the zone. First time into the zone. Prior to 6 months ago, I didn't think about it. I simply took the zone. Okay, what were the exceptions? Open drive higher, open drive lower. What will that look like today? Okay, so if we gap down this 4 points and we open right here at 1881, which by the way, I am moving well, let's give it a minute here and see if they push a little bit further. We'll give it 5 more minutes and see if we can't push down a little bit lower towards this 1879 area. We'll give it a second here. So we open here at the back of the zone, okay? No, I'm not taking a responsive buy right as we open, right? But if we open in this zone and they push out towards the gap, that means A, this zone has been tested. We'll open here. This area has been tested. That means if we come back down like this, right, that is the second touch of the zone, and I'm not overly interested in trading it unless I get clear tick divergence, right? And tick divergence prior to 9 a.m., I ignore anyways, okay? So